Thanks a lot, and everyone, thanks for taking time out of your schedule to attend. So we want to try to cover a lot of information in a short amount of time. Um, I'm not from New York, but I talk like I am, so hopefully I don't go too fast. Absolutely echo what Kimberly said. Please type in or raise your hand to voice any questions, comments, or concerns. It'll make it a lot more interesting, I think, for everybody. And especially if I'm going over something and it's not making sense or you've heard something different, feel free to throw that out. With that, I want to kind of jump in and we'll just kind of look at the agenda a little bit. So the thought process here is, when we talk to people who already do business with us, which are over 11,000, business owners, CFOs, controllers that have decided to work with us, we hear a lot of common themes. And one of the common themes is you don't know what you don't know. And so with sales tax, that's very true. Most companies don't have sales tax experts on staff. In fact, even their CPA firm probably doesn't have sales tax experts. So you kind of do what you've always done and you sort of cross your fingers and, hopefully so far so good. So what we want to do is make sure that you have a good understanding of what's going on now and why this issue is so top of mind for so many people. And there's literally probably 20 articles across the country in newspapers, websites, and blogs every day on this subject because it's getting so difficult for folks. And then we're going to give you some specific tips of areas that you should be looking at, things that you consider. A lot of times there may be questions you should be asking yourself, but you don't know what they are. So we're going to bring those to light and also give you a little bit of some hints as to what the answers may be. And then we want to talk about what's included when we say end-to-end compliance and we talk about automation. What does that mean? And then finally, at the end, we'll get specific into some of the specific solutions that Avalara offers. So hopefully this will flow and it will make sense. And like I said, just ask questions if you need to. So first things first, again, master of the obvious here. This is hard. And if you're doing this nowadays, you know it. So for the folks that have to do it, there's thousands of jurisdictions, thousands of rules. Is the organization exempt? Is the product exempt? Do they have a tax holiday? And every time you set up an account, there's all this work to do, and then you've got to keep track of all the changes. One of the things we see as well is people have called the state and asked for a ruling, and you get an answer, and you follow it, and then the auditor comes in and says something different. So it's just nuts, and it's very political. So it's something that most folks just don't want to deal with it on their own if they don't have to. So what they're showing on this map here is that all these little colors are different sales tax jurisdictions, and every one of those has different rates, different rules. In fact, you could even have a company with a particular address, and today it's governed by the county, the state, the city, and tomorrow the jurisdictions could change. They could be added, deleted, so it's the whole thing is variable. And when you start to consider if you do business in multiple states and you add up all those variables, it gets exponentially more difficult really fast. So we always put this slide early on. It's kind of tongue-in-cheek. One of the things we joke about at Avalara is we say we make sales tax less taxing and more relaxing. And, it's kind of a cute little rhyme. Hopefully people remember us. But in all seriousness, there's certain facts. We're required by law to collect tax. It's not a choice. You got to do it. Nobody makes money on it. It's a pain to deal with. So what you see is just like payroll, outsourcing sales tax would streamline your business process and allow you to divert those resources to things that are core to your business, things that make you money. So again, a lot of you out there, you may have automated payroll with Paychex, ADP, or one of those other companies. This is the same concept. Take a manual process, automate it, outsource it, drive that work away. And then what we're going to talk about is not only is it making it more efficient, but we also want to make it more effective. And by that I mean more accurate, because at the end of the day, speed isn't the only thing. You got to be accurate so that you don't get fined. So a lot of folks today are rolling the dice, right? And we talk to people and they say, well, I haven't been audited yet, or I haven't been audited in a few years, or I got audited and the fine was only $10,000. And some folks are a little cavalier about that. So that may be your attitude, maybe it isn't, but you need to consider some things that are happening right now. Okay? So states use sales tax for their revenue. It's a huge portion of their revenue. Almost every state is in a budget deficit. All these states are trying to increase revenue. So let me go back a second here. I got ahead of myself. So the way states are trying to increase revenues is a couple of different things. They're increasing their audits. So they're hiring more auditors, they're auditing more frequently. And they're targeting a lot of companies that do a lot of exempt sales, by the way. So maybe you're in manufacturing, distribution, or you sell to those folks, and you think, oh, it's not a big deal for me. Half of my sales, most of my sales are exempt. That's not the case, because they tend to target those companies. The other thing they're trying to do is pass rules about remote Nexus, and we'll get to that later, but the short version is they're trying to require you to collect and remit tax everywhere you sell, regardless of if you have a physical presence. So what does it mean? Sales tax is a source of risk, and again, it's not a matter of if you get audited, it's a matter of when you get audited. So we want to help you be ready for that when it happens. Any questions, Adrian? Or is everybody good? Okay.
I do not see any questions so far.
Here's some.
Sal. There's no questions so far.
Thanks.
Everybody is very attentive.
All right, good, because we can tell if you're paying attention or not. No, I'm kidding. So here's some things. One of the things you'll find about Avalara, and I guess my style as well, is we like to give you as many facts as we can, and we also have a lot of stories. And there's some horror stories, but there's also a lot of way more success stories. So consider this. Your chances of getting audited are up 22%, and the average penalty is $34,000. So the folks that do business with us have made a conscious decision that said, if I get audited, where's that $34,000 going to come from? It's not like I have a bucket somewhere with this money. And by the way, if that's the average penalty, that means somebody paid $24, somebody paid $44. And again, do you want to take that chance? Because like other expenses in life, they never seem to come at an opportune time. They usually come at the worst possible time. So consider that. And then the other thing to consider is if you've got folks that are spending, several days a month, and you start to add up all those hours, not only is there a cost of those hours that's real and quantifiable, but what could those people be doing with that time? Could your accounting people, could your credit people be maybe making collections calls to bring cash in faster, or could you be providing better customer service? So those are all things to consider. So let's talk a little bit more about the states. So again, trying to be a little cute here, but there's a gap, and it's very real, and it's all over our newspapers. So all these states are facing budgets, and the reason sales and use tax come up is typically, historically, they represent about half of all the tax revenues to a state. So think about it. Their source for half their money is going down. So there's a bunch of things that are happening as states try to make up that revenue. First of all, we talked about it before, they're hiring auditors at a phenomenal pace. So I'll give you some examples. Idaho in 2012 hired 48. California is hiring 100, and that's in addition to their normal staff to go after online sales. I'm from Ohio. Ohio hired 100 last year as well. So they're getting really, really aggressive about just enforcing the existing laws. So you may have been, quote unquote, getting away with it up until now, but the likelihood of getting audited is increasing dramatically. And then again, when they do audit, they usually find something. Again, with that average fine at $34K. So here's what else is interesting. States can't raise income tax. That's pretty much a political non-starter. Real estate taxes, again, values are down. So they look at, how do I increase my sales tax? Well, they changed the rules. So they can redefine Nexus. So it used to be, Nexus was, do you have a plant? Do you have a warehouse? Do you have a building? It was pretty easy to understand and easy to avoid. Now they're saying, well, you have affiliate Nexus. What does that mean? Okay, well, if I have a company like a manufacturer's rep group and they sell my products into different states, that could create Nexus. If I have a subsidiary that does business for me, that could create Nexus. If I have a click-through partner, I'm an internet business, and I have these mom and pops, somebody goes to their website, they click through their website, they go to mine, they buy something, I compensate the mom and pop, guess what? Nexus. And if that's not scary enough, they're also changing laws to have something what we call economic nexus. And what this is saying is basically if an individual on behalf of your company comes into my state and performs some sort of service, some sort of act, some sort of transaction that generates revenue for you, you now have Nexus. So that could be delivery, installation, training, repair, selling, trade show attendance. I mean, just stuff that you do, right, to grow your business, and you never thought about it. Well, now the states can change the rules on you. So the other thing they're doing is they're redefining what's taxable. So I'll give you some examples. Rhode Island a year or so ago took about 35, 50 items that were kind of like drugstore things, maybe over-the-counter pills and just braces and sort of devices like that, right? They used to not be taxable. They made them taxable. Services are on the table all over the place. So again, I live in Ohio. We have a Republican governor, obviously very low tax mentality. He wants to make services taxable. Accountants, lawyers, architects, they want to make it all taxable. Louisiana Governor Bobby Jindal, same thing. They want to lower income tax, raise sales tax, charge it on everything. You take digital content, stuff like Avalara, cloud computing services, or software that's downloaded. In most states, it's not been taxable, but now there's 20 states that have passed laws to start taxing it. So again, the takeaway is the rules are changing. You may have obligations and liabilities that you don't even realize already, or you may want to simply bulletproof yourself so that if and when you do get audited, you're as prepared as possible. And that's a big part of what we're trying to get across today is not necessarily to scare you or anything, but just to say, hey, you need to be aware, and you need to look at where you're at today, and do you have any liability? Are there things you could be doing right now to affect your situation? And then two, is your situation going to be different in the future, and what are you going to do about it? Because you don't want to wait until that day happens and then suddenly be scrambling. It's much better to look into it now. And by the way, one of the things Avalara does is we have these discussions with you and can provide input and information and white papers and case studies and references without charging you a penny. So our job is to help you and educate you, and then if it makes sense for you to automate, then we'll talk about that then. And just to make that clear. One last thing on this one, I'm sorry I talk so much on this slide, but this is really the crux of the whole thing. So there's bills before Congress, and one in particular has already passed the Senate with overwhelming support. It's now in front of the Congress, and it's Marketplace Fairness Act. And without getting real granular, understand that if that law passes, it's going to require folks to collect tax and remit tax on internet sales and on remote sales. So remote sales would be if I'm in Ohio and I have customers I ship to in Pennsylvania and Michigan and Kentucky, right now I might not have to collect tax. If the law passes and I have reach a minimum sales threshold, I'm going to have to pay tax. So it's something you need to be aware of, and you have to have a plan. Okay, so I think most people are kind of aware of Nexus, and that there are certain places where you have to register, or maybe you've looked into that, maybe you've talked to your CPA firm or whatever, but it's changing, right? And so, and this is, again, we're trying to have some fun with a really tough subject, but think about it this way while you're looking at Brittany. States define Nexus as tangible physical presence, right? And what that means in English is you have the requirement to collect and remit sales tax. But these Nexus definitions are constantly changing, and not only that, they vary from state to state. So you could do the exact same thing in 5 states. 3 of them might say it creates Nexus, 2 of them might say it doesn't. So really confusing. Couple quick examples. If you have agents or distributors in the state, if you have remote employees. For example, I'm based out of Ohio. Avalara is in Seattle. Avalara has Nexus in Ohio because of me being here. If you go out and service equipment, so it's tangible personal property, and your employees go out and provide services, repair, maintenance, whatever, that can create Nexus. Simply attending a trade show. The other one that's really scary is depending on how you ship the products into another state, that can create Nexus. If you use your own trucks or if you use a returnable container, those can create Nexus. And then the surprising one, I think, for a lot of people is, so my boss lives in Jacksonville, Florida, right? So it's pretty easy to go from Jacksonville and get into Brunswick, Georgia, Savannah, or whatnot. And so a lot of companies might have a person based in Jacksonville and they cover Georgia too. So if you go from Jacksonville to Georgia over and over again, you know, to do sales calls or whatever kind of business, that creates Nexus, even though I don't live there, just by going there regularly. And guess who gets to define what regular is and what material is? The state. So again, it's almost like the cops are making the rules as you go. So today you do what you do, but tomorrow they change the rules, and then they're the ones who enforce the rules. So it's crazy. Okay. So, and I won't read through this whole thing, but again, these are the questions you should be asking yourself, because if you're doing any of these things, you may have created Nexus. So what you want to avoid is having the state tell you that, because if they come to you first, they can audit you, they can go back several years and collect back taxes, interest, penalties, so it could get real ugly real fast. On the other hand, if you can proactively address this, you can dramatically mitigate your risk and reduce your liability, and those are things that we can help with. So, yeah, I mean, I think that's pretty self-explanatory. I don't want to beat it to death too much. So let me leave it at that. And keep that in mind, though, folks. If you have questions now or at the end, you know, feel free to ask. And I think some of this is sort of self-explanatory in terms of the concept. But you know, what we would say as advisors from Avalara, if you have any doubt at all about this, talk to us, and we can walk you through some things, and you can tell us some specific circumstances about your business model and where you do business and how and who you do it with, and based on that, we can give you some suggestions and say, hey, in our experience, the states are going to say that you have Nexus, or this is going to mean this. And then if it's more complex, we have the ability to do to have our tax services group do a Nexus study for you. And the benefit of that is we can go to the state on your behalf and present your situation anonymously and get a ruling, and then we can guide you on how to respond to that ruling. So be aware that it's very dangerous to go to the state and say, hi, I'm Sal from ABC Company, and I think I might have Nexus. I mean, if you do that, you know, the cat's out of the bag there, and they're gonna make the ruling, and you really can't undo it once you've done that. So think about that. Okay, so one of the things that states do is they have ways of determining if an event's taxable or not, so like a sale. So sometimes it's based on sourcing, and then there's a variety of different options. So there's destination, there's origin, there's mixed. You may be familiar from this already with your state. I know with the destination base, there's only about 13 states that use origin-based sourcing, and I think a bunch of them are actually going to be changing to destination, because as this law gets legs, more and more folks are going to have to comply with a format that's designed to simplify the whole thing, and they're going to try to get everybody on the same system in theory. So every time you're calculating tax, you have to figure out the location and the product rules that go into that. And so the sourcing rules determine which jurisdiction, so whether it's the origin, where the order is shipping from, or the destination where it's going to, which one of those apply. Okay, so you got to figure that out, and then you can correctly identify the jurisdiction and the rate and drive the calculation. So that's kind of key right off the bat. And again, there's probably about a dozen states that have the origin-based sourcing rules, and what gets tricky about the whole thing is that if you're in a state with origin-based and then you're shipping to another state with different rules, as you go across state lines, it starts to get really complex. So don't worry about understanding all of this right this second. Just be aware that these are out there and these are things that you might be considering. And we talk to people every day that are trying their best to comply with this and maybe not succeeding all the time, or there's folks that aren't even aware of it and they're just applying the rates based on their best guess, and either one of those is dangerous. So one of the other things to consider is the product taxable or not? So the same exact item could be different in one state or another, and sometimes you have almost the same exact product and it's handled differently in a certain state. So the classic example we show is the Milky Way here, and the Milky Way on the left is considered taxable in most places because it's described as confectionery or candy to you and me. And then the Milky Way Midnight has certain ingredients into it that are classified as food, and so it's not taxable. And it's darn near the same exact thing, except for different kinds of chocolate. So it's really nuts. Another quick example off the top of my head, New Jersey, right? So if I have bottled water and it's fresh water, just regular water, it's considered food, it's non-taxable. If it's sparkling water, it's considered a beverage, it's taxable. So obviously a lot of lobbyists out there making stuff happen, and you're left to sort it out. In fact, if you look at last year, there were over 450 changes in the taxability laws alone. So we're not talking about rates, we're not talking about boundaries, just whether it's taxable or not. 450 changes, so that's kind of crazy. So, the point we're making is that you should be reviewing the taxability of your products and services, especially as you add new ones, to make sure that you're compliant. And for most companies, you probably don't have a sales or use tax expert, so how do you interpret those laws for every taxable state and locality? The level of sophistication needed to make the right tax decisions is pretty high. And for most folks, it's a resource and a knowledge that you just don't have internally. And I guess the thing to think about is, as a seller, the essential thing is that you have to know what's taxable in each applicable taxing jurisdiction. Otherwise, you're going to have exposure to liability in an audit. And you need to have knowledge about what's not taxable, because you don't want to overcharge your customer. And then, you could get in all kind of trouble there, class action lawsuits and stuff like that, which is, it's happened, and it does happen and continues to happen. So I guess that, the thought is that the more a company can automate the tax decision making and make it systematic with respect to both sales and purchases, the more you can eliminate and minimize your tax exposure. And before I get to that too, the other thing to think about too, so if you're not sure about taxability, I can tell you that it's most likely an issue in businesses like software and hardware, digital goods, medical devices and equipment, food and beverage, clothing and apparel. Those seem to be the most difficult industries to handle taxability. And again, it's one of the things that you can do with automation. A service like Avalara not only addresses the rates, but it addresses the taxability, and that way you don't have to be an expert in it anymore. So a lot of folks, when they think of tax rates, they think of zip codes, and they say, well, if I know the zip code, I can figure out the tax rate. And a lot of times when folks are doing this manually, so you have to research the tax rate and put it in your ERP. So if you pretend like you were doing let's say it's a new customer, I've got to enter their address. I've got to see, do I have Nexus in that location? Okay, yes, I do. Okay, well, which taxes apply? Is it the city? Is there a local? Is there a county? Is there a district? Is there state? Is there some sort of special jurisdiction like for a football stadium? You got to figure all those out, and then you got to build tax codes and group them for that customer, and you got to name them as a tax schedule and get all that into your accounting system. You got to make sure you've got the sourcing rules right. You've got to build those rules in, across your products, and on and on and on, right? And then every time you have a transaction with that customer, you kind of have to repeat the process and make sure that you're up to date. So this is one of those deals where sometimes what you've always done is a little bit crazy, but it's what you've always done, so you never really stop to think about it. But our preposition is that while you may be getting by with what you're doing and have worked really hard over the years to come up with that process, we're here to tell you that there's a better and easier way that makes all of that disappear. And with Avalara, all your folks would do is enter the order. And when they hit total, it calls out to Avalara, and Avalara goes through all that decisions that we just talked about and gives you the right tax. So let's take a look at what happens when you do zip code-based taxes. Okay, So the problem with that is this. We're going to take an illustration here in Denver area, metro area, and it shows real quick how complicated it gets. So within this one zip code, 80111, I've got all kind of different rates, and you can see that there's about 6 different rates there. So there's 2 challenges with that. First of all, you're probably high propensity to make a mistake. If you undercharge, you're left having to reconcile that with the state, which most companies just cut a check and pay for it. If you overcharge, amazingly, customers always seem to notice, and it could be a nominal amount, but now you're doing a credit memo or a credit and rebill or some sort of refund, which is taking time and money and certainly not doing anything for your customer satisfaction. So part of the reason this is so complex is just in this one zip code, we've got all these jurisdictions, states, counties, cities, special districts, and again, keep in mind that my address, pretend my address was where this dot is, it could stay exactly the same, and this list here could change. And then within each jurisdiction on the list, the taxability rules could change, the rates could change. So just for one customer, one address, that's a lot of complexity. And then when you start to imagine that over thousands of customers in several states, you kind of wonder why you ever even considered doing it manually. So again, it's hard, and doing it with zip codes is really inaccurate and really risky. And we'll talk about some options you have with that. So what not to do? Well, you have to keep your rates and rules up to date, right? Because, you might have one day gotten really motivated and you had a big project and you got everything right, great, but then, they almost instantly become obsolete. You also have to remember that the rules are changing, and you probably are getting letters or emails from different states and whatnot, but you have to act on it. I know last year we had a client who had processed thousands of orders in California and failed to realize that California had a 1% decrease in their sales tax, and they had to go out and redo all those invoices. So, you got to pay attention. And again, if you are doing it manually, it's very error prone to do that. So, what you want to do is just be aware of these things and kind of stay on top of it. And we'll talk a little more about that. Okay, so consumer use tax. This is another area when the auditors come in where people get nailed. So this is more about when things are bought as opposed to the sell side. So we'll try to explain that a little bit. So on the one hand, you have sales tax. So I'm the seller. I collect it when I invoice, and I do that as part of the sale, right? It's added into the amount. Use tax is self-assessed by the buyer, and it can be done on a cumulative basis. So most people do it monthly. And that's a situation where the seller doesn't have Nexus and they don't collect tax. So if you buy something and you're not charged tax, you may be required to pay use tax on it. And again, that's something that goes on the same return, and it's something that companies make mistakes on quite frequently. So auditors, again, they're going to look at use tax, they're going to look at exempt sales in addition to your sales tax. So be aware that you have to have all those bases covered. And again, I think this talks about, you need to self-assess. Ignorance is no excuse. Almost everybody has obligations for this. And if you look at the second bullet, if that looks like you, then this is something that you definitely want to pay attention to. Because like anything else, there's degrees, right? Your situation with consumer use tax may be limited, and so it might not be a huge deal. And other folks, this may be a very big deal. But the point is, you want to at least consider these things and make sure that you've got it addressed. So to make it clear, if you're not sure, these are some of the things that would trigger use tax. So if you buy an item for internal use, you would have to submit the use tax. So and sometimes where people get tripped up is maybe it's an item that I resell or that goes into the customer, but occasionally I use it internally. Maybe it's a sample, or maybe I'm a computer services company and we sell people laptops, as part of our services, and then I hire a new employee and I take one laptop out of inventory and I give it to the new employee, well, now that's no longer tax exempt, so I have to claim that and pay tax for it. So again, if you have any questions at all, the point is these are things that we should talk about with you. So you don't feel bad if you don't know all the answers right now. That's not the point. The point is to at least know the questions and then start thinking about it. So again, you want to make sure you're keeping track of this. You want to make sure you're paying it and that you understand the rules and that you have a process for calculating it and submitting it on your returns. Okay, so we talked a couple times about exempt sales. They continually get more complicated. A lot of states are talking about changing who's exempt and what's exempt. So even if you think you got a decent handle on it now, it's changing, so you have to be prepared. So the process seems to be really simple, right? Get a new account, they tell you you're exempt, ask them for the certificate, capture it, enter it in your accounting software as exempt, save it. Should be really easy, but it's not. So you really need to make sure the certificates are valid. You need to make sure they're up to date. They expire at different times depending on the reason, the type of exempt certificate, depending on the state, and you have an obligation to make sure the certificate's valid. It's not an excuse to say, hey, I asked the client for a certificate and this is what he gave me, so don't blame me, blame him. It doesn't work that way. They'll blame you both. So that's something I think sometimes people are surprised for. So a couple things to watch out for. You know, you want to know who's expiring when and make sure that you're keeping them up to date. It's very easy to get tripped up when they audit you and you show them the certificate and it's expired, boom, you know, you're in trouble. Other times people might have a certificate and it's not signed, doesn't have the right information. There's a lot of things that can affect it. And then there's other things too, like I know when if you acquire a new company or you had some changes in your company, you need new exempt certificates because the certificate's got to have their information and your information. So changes to your business like that could suddenly make all the certificates you have no longer valid. Another thing that trips people up is you've got a certificate for a company as a reseller, let's say, and you normally ship them goods in Florida and their certificate's good. And then one day they say, oh, we need this order shipped to Georgia. Well, that certificate may not apply for Georgia. It may only be for Florida. And so you need to know that, and you need to make sure you have the right documentation. Yeah, so I think that's the basics there. I mean, there's more I could say, but I don't want to go too granular. So what happens when they come to audit you is they're going to look at a list of exempt sales, and they're going to want you to be able to quickly pull documentation for that. So you want to have a way to summarize that. You want to have a way to pull the certificates really quickly, and then you want to know that the certificates are accurate and current. Keep in mind, too, states that are looking at rule changes for this are Colorado, Minnesota, Maine, California, Louisiana. So if you do business in any of those states, that's something you're going to want to look into. All right, so when, where, how, right? And the returns are really a big part, too. We talk to a lot of people that spend several days a month doing this. And again, it's one of those things where it's their version of normal, but when you start to add up the cost that you're spending on that labor to do this, and then the risk that you're taking in terms of accuracy, you may want to think again. So what you want to do is review whether your filing schedule has changed, okay? Because the schedule generally relates to your business revenues. So sometimes you might have a place where you had to file quarterly, and it could change to monthly, and you need to be ready for that. Usually the beginning of the year is a great time for people to kind of make sure that they know how often they have to file the sales and use tax returns, and typically the jurisdictions will send you notices, months in advance of the frequency change. But even if you don't receive a notice, it doesn't mean that a change doesn't apply. I'll give you an example. Most newly registered taxpayers in Florida are set up to file the returns quarterly. But if more than $1,000 of sales tax is collected in a fiscal year, you're now required to do your returns monthly. So, and that's just one state, and it can be different everywhere. So you want to make sure you update the filing frequencies on your tax calendars, and just make sure that you've got everything covered. So jurisdictions have different requirements in terms of the way the payments are handled, in terms of the way the filing is filed. So for example, some jurisdictions require prepayment, and some of them have minimum requirements based on your taxes due. And they might have different schedules for payments based on your filing amounts. So have you checked with all your jurisdictions? Are you sure you're filing it properly? If you don't, you might get notices, and then you've got to take time and effort and typically a lot of frustration to figure this out. And the worst case is you could even shut your business down while you work on the offended jurisdiction to achieve a resolution. So again, these things are real and they're serious, and unless you're 100% sure, it's something that you want to investigate. And again, we may investigate and we may find that you're okay, but more often than not, we find places where people need to take corrective action to limit their liability. And the good news is it's things that we can help you with, and they're things that are solvable, and it usually isn't, you know, $1 million solution. And again, with regard to the prepayments, a lot of jurisdictions require this for large tax amounts, and it might be a different filing schedule than your regular returns. It could even be more than once a month. So if you do have prepayments and you remit in multiple jurisdictions, you might end up with multiple filing schedules. So it's a lot of work to do in your calendar and a lot to keep up with. And again, you can see where as you get that kind of complexity, where automation might be beneficial. So what else do you have to know in terms of e-filing, right? So does that state have e-filing? Is it required? It can actually save you a lot of time and money, but not all jurisdictions do it, and others make it mandatory and some don't. So again, different states, different rules, different guidelines. So you want to make sure that you know that your processes are up to date with each state and each law. Couple case in points. In Indiana last year or this year, Indiana's mandating e-filing of sales and use tax. There's 18 states that already do it. And let me check my notes here a little bit. So you've got Alabama, California, D.C., Florida, Georgia, Iowa, Indiana, Massachusetts, Maine, Minnesota, Nebraska. I almost said New England. Sorry, Nebraska. Nebraska, New Jersey, New Mexico, New York, Ohio, Oklahoma, Tennessee, Texas, Washington. So those are states mandating it, and there's actually 27 states that allow it without mandating it. And then you have Michigan. Being from Ohio, it pains me to even say the word, but Michigan allows only paper returns. So again, and I apologize for beating this to death, but every state and every place is different, and you have to be really, really vigilant and make sure that you're absolutely 100% right and you're not making any assumptions. So again, what not to do. If there's prepay requirements, you want to make sure you prepay. You don't want to have late payments, and you certainly don't want to pay the wrong jurisdiction. All of those things take time and money, and they also could trigger audits if you do it wrong. Because, by the way, you can get audited by paying too much just as well as by not paying enough. So what do? Get help. And again, I think we've been kind of, hopefully I've been really, really obvious that this is our suggestion here. We have a lot of resources, so we can provide information on sales tax holidays. There's also information on most states' websites about this. We have free online tools like AvaTax rates or taxrates.com. Those are all places that, at least on a one-off basis, you can get help. We also have the ability, if you're confused about where you have Nexus, or you need help getting registered, or you've discovered that you have Nexus and you want to negotiate with the state to minimize your obligations, we have a tax services group that can do things like Nexus studies, registrations, and involuntary disclosure agreements. And real quick on the voluntary disclosure agreement means you find out that you've been doing business somewhere for 5 years and you haven't been collecting and remitting taxes. We'll go to the state on your behalf and negotiate with them. and that usually limits the look-back period, and it usually limits the amount of penalties and fines. Unfortunately, you're still going to have to pay the back taxes, but we can at least mitigate the risk and the liability. So the other thing you can do is simply automate it and avoid a lot of the hassles we've been talking about. So this is a little chart or a matrix to kind of illustrate some of the options and some of the things that people do. So, you know, if you do everything manually and you really work hard and maybe you outsource some of the research and everything, you know, that can help with accuracy, but it's not really efficient use of time and it's very expensive. Some people just, we hear stuff from people sometimes say, well, I go on the state's website and I look up the rate for the state and I just charge that. And they don't even consider the local jurisdictions. So, I mean, that's like a head in the sand kind of thing, and that's just a disaster waiting to happen. So what we're offering is, hey, why don't you automate all your sales tax functions, get rid of that whole method or manual method, and now you've got a low-risk scenario and a low-cost scenario, especially when compared to the cost of doing it manually. So we would cover all these things, right? So sales tax, use tax, the returns process, managing your exempt sales. We can provide some of the tax services we talked about. And again, whatever your business model is, you're going to deal with this in some way, shape, or form. So either you have exempt customers or taxable customers or a combination. You still have issues. Everybody has some sales tax. Maybe they have use tax. Maybe you have to deal with 1099s, which aren't even sales tax, but it's a similar concept. So those are all things that we can help with. So let's talk a little bit about what Avalara does and how we do it. One of the things you'll notice here is our business model is about giving you the right information in the right context at the exact right time. So it's not about uploading and downloading databases. It's not about rate tables. It's not about a book on your shelf. It's about saying, okay, I have to process an invoice in my accounting system, in my e-commerce, in my point of sale. Maybe I've got some sort of custom application that we built at home, whether it's a web store or a quoting tool. But at that point, when I'm trying to finish this order and give somebody an invoice so that I can finish the process, that's when sales tax is important. I don't even want to think about it until then, but at that moment, I want it. And so what Avalara does is instantly give it to you at that moment without any training for your staff, without any intervention, without anything to look up, upload, download. You just process your order. And we do that with pre-built integrations to almost any mid-market ERP you could think of. And we do it by also integrating to e-commerce applications and providing a toolkit for custom applications. So I specialize in working with Sage folks. We have pre-built integrators to PFW Pro 100, 300, 500, X3, you know, most Sage products. And what's interesting about that is we work on this with Sage. It's certified by Sage, and it's actually ordered through your Sage reseller, and it's on Sage's price list. And the reason I mention that is Sage has got a big stake in this. So you know that it's going to work with your current technology environment, and it's going to work with your future technology environment. And I think that's really important, and I'm sure IT people at your organization, or if you're the IT person, you know, you recognize that. So let's talk about what it means for end-to-end compliance. There's three core components for Avalara. So the first one is AvaTax Calc. You might also have heard it called Sage Sales Tax, same thing. And again, when someone processes an order, Avalara does all this stuff.
And Sal.
Validate the address.
Sal,
Sure.
this is Adrienne. Just real quick, I wanted to clarify that the same thing for Microsoft Great Plains, correct?
Yes, thank you. Yeah, I'm sorry. So just to give you a few, so it's Sage, Microsoft, Epicor, Infor, Intact, Intuit, QuickBooks. I can't even remember all of them. There's probably 30 different accounting software packages that we have pre-built connectors to, over 20 e-commerce packages, several POS packages, even mobile commerce. So the point I'm making is whatever system you use to process orders and to run invoices through, wherever sales tax is relevant in those processes, we have the ability to connect there seamlessly and integrate to them. So I apologize if I didn't want to leave anybody out in the audience.
And that's one way you guys have been so successful is because of all of the partnerships that you have accomplished with.
Yeah, and I probably should have mentioned this on the last slide. So the takeaway there is we realize that sales tax isn't the important thing. The important thing is I've got this accounting system or this e-commerce system that lets me run my business and be efficient, that lets me provide good customer service, that keeps me compliant with the government, that lets me, look at my accounting data and make business decisions based on that. So we made a philosophical decision a long time ago that we wanted to make our products subservient to these other products and just make them work better than they do now and provide technology that they couldn't provide by themselves. So now if you use any of those products, you can easily incorporate a best-of-breed sales tax solution that's set up in a matter of hours, a few days really, okay? And then once it's set up, your people who process orders don't do anything different at all. They go into their sales order module, which most ERPs have, and you process the order. And then every time you hit total, it makes a web services call to Avalara. Avalara is going to validate the address. We're going to assign which jurisdictions. And what we're going to do is for every line item in the order, we're going to say, in this jurisdiction, is the product taxable? What's the rate? Do sourcing rules apply? And all that happens instantly. So when I'm processing the order, I press total. Avalara automatically gives you the tax amount. And your order entry person doesn't ever have to think about tax. It's just done. So that's the beauty of it, is it's truly seamless and it's truly real time, and there's nothing for your folks to do. I had a great quote from a customer, and she said, what I want to do is get my sales and order entry people out of the tax business. That's not why you hired them. You hired them to provide customer service and to sell, certainly not to be tax experts. And even your people in accounting, probably don't have this expertise, nor do you want them to spend time getting it. So the other aspect is, I know a lot of the people I talk to might sell to resellers, they might sell to manufacturing, so a portion of their client base is exempt. Maybe it's government, maybe it's a hospital, for whatever reason. And so what we do is automate the whole process. So if you imagine a new customer, you can send them an email request, they go to a link, they go to our website, and they fill out some questions, and it makes sure that we have the right certificate and that it's signed. So you can think of that collection wizard as, if you ever go to create an account online and you don't complete it right, how it won't take it, and it gives you that little red message like, oh, fill in this blank, you left that blank. Well, that's kind of how this works. So what happens is, with our process, we know we have the right certificate, we know it's signed, and we know it's current. And then it integrates to AvaTax, so when that customer comes up the next time for an order, the first thing the AvaTax is going to do is go, oh, they're exempt. Next, and we don't calculate tax, we're done, we know it. Also, we're going to automatically set a calendar event so that before they expire, it's going to send them an email, and then the client has the opportunity to send in the current certificate. And if they don't send the current certificate, you start charging them tax. So everything is really cut and dry, and it takes the guesswork out for your people, and that's really huge. And then if you do get audited, you have access to all these at the click of a button. And it's, once the auditors come in, they might look at a sample of 100 exempt sales and try to ask you for documentation. You sit them down in front of Avalara's dashboard and say, hey, have at it. And they're gonna be done in like 10 minutes because they won't find anything. And what auditors want is a repeatable, systematic process that's documented, and when they see that you have that, they tend to not come back. And we've got great stories about that. I'll give you an example real quick. We had a company in Mississippi that spent days and weeks responding to an audit and just was a nightmare, and they got fined a real high amount, and then they got Avalara. And unfortunately, they did it in that order. We hope that you work with us before you do that, but the next time the auditor came, the auditor was out of their office in 20 minutes, because once he saw that they had an automated process, he knew that he wasn't going to find anything. And I don't know if you know this, but we've got a lot of former auditors that work for us, and auditors are measured by how much they collect and how efficiently. So if they can come into your office and in a short amount of time rack up a bunch of fines and penalties and back taxes, that's what they want to do. And the first place they're going to look is exempt sales. So anyway, okay, so then you have the returns, right? So this is really where the outsourcing point comes, because I've talked a lot about automating and outsourcing. So I think this is automating. This is kind of the outsourcing part. So what happens at the end of the month? For every jurisdiction, we're going to create a liability worksheet. So you go into that liability worksheet and you look and say, okay, Georgia, this many sales, this many exempt, this many taxable. You looked at that compared to your GL. Yep, looks good, matches up, approve. You're done. 2 minutes. We will complete the return, paper or e-file. We'll file the return. We'll even send them the money. You have all your return data in an archive that you can see at a moment's notice. If you do get any notices sent to you, you send them to us. We'll follow up on the notice. So you're outsourcing the work, and we actually take on a limited power of attorney, so we're absorbing some of the liability for you. So again, not only a huge efficiency play, but a huge, huge, huge risk mitigation. So that's kind of what we mean by end-to-end. And then I mentioned this before, so it came to our attention that folks have a lot of the same issues with 1099s. And I realize this is more of the payable side of the house, but without Avalara, at the end of the year, somebody's got to manually run reports and, you know, stuff envelopes and send things out and work with the state or the IRS and make sure everything's accurate. So there's a lot of work, and we have the ability to automate that whole process and kind of make it go away. And again, same concept. Automate a manual process, make it faster and easier, and again, ensure compliance by making sure it's accurate. So once you do that, you've got everything covered in terms of efficiency and accuracy. And the interesting thing is we do sell these services a la carte, but 80 or 85% of the folks who do business with us use all of it. And out of the ones that don't, we have some customers that every one of their customers is taxable, so the certificates isn't an issue. Maybe you only deal with 10 1099s a year, so you don't really want to spend the money to automate it. That's fine. We understand that, and you can pick and choose what you use us for, and that's really, really neat. And I want to spend a second on that real quick. So with most software, I think you've all probably been through a demonstration, and what happens is the software might have like 10 really cool things it does, but you only need 4, and unfortunately you have to spend a lot of money to buy the whole thing. Whereas with Avalara, you buy what you need and then you pay for it to the degree that you use it, which we can cover later. One other thing is, because of the high degree of interest in consumer use tax, we've also added the ability to automate the consumer use tax calculations as well. And again, if you're in one of those industries listed on the right, this is probably of particular interest. So keep that in mind. And again, it's one of the things, why we like to talk to people once a year at least, is the rules change, your business changes, and then our offerings change. So all of those are good reasons for us to talk on a regular basis. Even if we talk the first time and you say, you know what, I think I'm okay, that's completely fine, no obligation, but let's talk again next year. And when the time comes that you need help, we want to be the ones that you think about. A lot of businesses are expanding, right? So let's say you're selling into Europe, and maybe you ship it into one country and it gets sold in other countries, and all of a sudden, if you thought our stuff was hard, they've got these rules about value-added tax, and it's complicated and it's different and it's scary. We can automate that as well. So really big plus if you're doing business globally and you deal with value-added tax, let us know and we can talk you through that. We partnered with one of the top firms in Europe in terms of content and information and resources. So you not only get everything that Avalara has, but we get them as well. And we continue to offer our services in more and more countries, by the way, in more languages and more denominations in terms of currency. So if that applies to you, don't rule yourself out. Talk to us, and in more cases than not, we can help. And if not, we'll let you know that too. Again, I think I talked about this throughout the course of the thing, but these are other fee-based services that we provide. And keep in mind that because we specialize on sales tax, and because we have a lot of former auditors and former tax attorneys and people that were partners at big firms, we've got a great number of resources, and this is all we do. So we can typically do it faster and for less money than who you might expect, typical firms that get involved with tax. A lot of those folks are more focused on income tax. So let's just recap a little bit. It's going to help you save time, keep you more accurate, mitigate your risk, gain efficiency, increase profitability. Everybody wants to do that, right? And that's not just me saying it, but we have customers say it. If you go on our website, you can click on these photos and you can listen. And we're really kind of excited about this. And forgive me for a minute if this sounds corny, but we've got dozens and dozens of case studies, dozens and dozens of references. So when folks are getting ready to make the decision with Avalara, we can put them on the phone live with one of our customers and let them ask anything they want. And we've got these other folks who not only said, hey, I'll be a reference or I'll be a case study, they literally allowed us to film them and say, tell us about your experience, and they're on our website. People don't do that if they like your product. They don't do that if it does what they expected. They do that when they love your product. And we're really, really flattered that folks think that way about us. And I encourage you to check it out because, again, candidly, my job is to tell you how wonderful we are. But these folks are just regular people just like you. And, again, some of the statistics on the side, you may be new to Avalara. You may not have heard of us. But we're not new to this, and we're really good at it, and we're really big. If you fly a lot, we're starting to be advertised in United Magazine. We're on Sirius Radio on some commercials now. We're getting a tremendous amount of attention from the accounting profession and CPAs. This is really growing, and again, it's growing because the need has never been more strong, and thankfully we've invested a lot of time and money and a lot of expertise to be the leaders. Hang on a second, I might have gone too far there. Oh, and this just, sorry, I got a little click happy there, but this does show you the website, and if I wanted to, I could click right on there and go to the that. Give me a second, I need to get back to the presentation, forgive me. So, again, just to give you an idea of who our customers are and what they look like, there are folks that have complicated states. So even if you only had one state, but it's one of those states listed, it might be a good reason to talk to us. If you're in difficult industries, food and beverage, medical, technology, if you've been audited before, if you're bought another company, if you're expanding your geography, if you're adding e-commerce, those are all good reasons to visit sales tax and to talk with us. Again, a little bit about us. I probably overdid the bragging already, but we've gotten a lot of awards from outside parties. In fact, we even just got something recently from Red Herring, I think is the name of the organization or the publication. So we continue to get recognized. We also got an additional endorsement from Microsoft recently. So we're endorsed the solution for several different Microsoft products as well as Sage as well. Again, sometimes we talk to folks who do the work and they get it, and they say, yeah, but I got to sell this to ownership. Well, think about it this way. We like to think of Sage or Avalara as the perfect employee, right? So you've got somebody that always does it right, and never goes away. And consider this, I mean, it's a little bit tongue-in-cheek, but think about it. A lot of companies that I talk to, they've got one person, you know, let's say it's Sal, and this guy is your tax geek, and he knows everything, and he's got it in his head, and as long as he's around, he can answer any question. Well, guess what? People leave. They quit. They get promoted. They retire. And it's not really a great way to run your business to have all that knowledge in one person's head. By automating it, we can take that person's knowledge and incorporate it into the solution, and then it makes it possible for multiple people in your organization to address this, and you're not beholden to one person's knowledge. And again, no offense to that person, but if they figure this out, there's probably other things they can do for you that would be more valuable. Again, real simple value prop here. Fastest, easiest, most accurate, and affordable way to do it. So, you know, think about that when you think of sales tax. And any kind of questions, let's open up the floor and see what people have to say.
Thank you, Sal. There is a question. Have you done any studies on how much time this has saved a particular customer?
Yes. In fact, we have an ROI calculator that estimates the amount of time that folks take, and there's also been white papers, like Aberdeen did a study, and they said small and medium businesses do between $22,000 and $40-some thousand a year they spend on it. So, you know, we can, there's data points where if you look at calculating tax and you take a full-up salary of somebody as, you know, X dollars an hour and they spend this many hours on it, you can figure out that amount. And I don't want to just pull numbers off my head, but we have them in the ROI calculator, and most companies, it pays for itself. The payback's less than 6 months in terms of ROI, and the ROI percentages are startlingly high. So that's without even taking the risk into non-compliance. Just efficiency alone, it usually pays for itself. What other questions do you have?
Oops, sorry, Sal. It helps if I unmute my line. I was talking. I just would like to ask the audience, I have a poll up, and if the audience can answer this poll, are you interested in learning more about Avalara? We could get a few moments of your time to answer that poll.
Yeah, and while the people are doing that, I wanted to make sure you understand things. So when we first talk with folks, what we typically do is we call it a compliance checkup. So it's kind of like going to the doctor. And we're going to ask you, tell me about your business. You know, what do you make? What do you sell? Who do you sell it to? How? Where? Those will tell us a lot about your tax profile. And then we'll kind of ask you about what's your current process. How are you dealing with it today? What areas do you have trouble with? What areas do you have questions with? And we'll try to make some suggestions as to, you know, areas that you need to dig into a little further and things that you should consider. And we can oftentimes do that in as little as 10 or 15 minutes. And then at that point, it's usually pretty obvious that there's a need and there's interest. And then we would get into a more of a traditional thing where, you know, we'll do a deep dive discovery and a demonstration of the software and all those kind of things. But initially, it's not about product, it's not about selling, it's about, hey, let me understand what your situation is and let me see if we can help. And by the way, there's a decent portion of folks I talk to where the answer is, hey, you guys are all on top of this, your situation is good, I don't think you need any help, you know, good luck, let's talk next year. And what's nice about that is at least you get validation, because maybe you've been working real hard and you think you're doing it right, but you don't know. It can be very comforting, you know, to talk to somebody who's got some expertise and get validation. So understand that, you know, we fully get that that's going to be the case in, you know, I don't know, a quarter of the people that we talk to probably.
And if you do have a question, please type your question in by clicking on the question mark button next to your name, or go ahead and raise your hand and I'll unmute your line so you can ask your question. And Sal, I'm not seeing any more questions.
Okay, well, I'll tell you what. First of all, thanks everyone for attending, and I'll give you one last bit of feedback. If you file taxes in 2 or more states, if you're doing business in several states, if you've already automated processes like payroll, it probably makes sense to talk to us. You know, I definitely think at a minimum that's probably somebody who has enough issues where we can help. So reach out to us and or your partner if it applies, and we'd love the opportunity to speak with you. Thanks, everyone.
And thank you so much, Sal. Wonderful presentation, everybody. Have a great day, and let us know if you have any questions. We'll be in touch. Take care.